Hello traders, today is June the 17th. My name is Neville Hornsey. I'm a market analyst for YouTrading. Today I'm going to do a market update. Going to start with the euro versus the US dollar. Looking to the left-hand side, we've got the sentiment indicator on the active trader platform, 50-50 bulls versus bears. So sentiment is evens, no real direction to sort of fade. So we're looking at price action and momentum. If we look to back here, 28th of April, all the way through to 15th of May, we had positive divergence on the RSI versus price action. So that gave us, a signal that we could go higher. Looking back here, we had a big pullback onto the 13th of June. Looking to the left, we found this candle here, 12th of May. Everyone that was selling there obviously got, run over by the bulls. So the demand is obviously still there. We've seen them test it a couple of times into the 15th of June. And then on the FOMC sort of data, we actually sort of rise up. Now we're looking to that Wednesday high, see if that acts as support. Obviously, we pushed down into it today. We look here, we've got on the 30-minute chart, we've pushed down into the highs of the 15th of June, looking to see if that acts as support. If it does, then we're going to break higher and we're going to start seeing the bulls take the stairs. So we're looking for a push higher, slight retrace, push higher, slight retrace, and that positive action that we sort of see here from the lows of 15th of June, we just want to see that continuing, going through the 1.06 all the way into the 1.07. To get back above 1.07, get through this sort of daily range here, that balance area, all the way through to 1.08. Then hopefully we'll keep moving until we get to the 200-period moving average and the 1.1. Now, the reason why that could happen is if we go to the actual economic data today at 10 o'clock, we had the final European CPI data come out. So 8.1% for May was the expected reading. That's how they had done the print before. The final reading came in as expected. So that's positive in that respect. But if we go to the actual report here, the Euro area annual inflation rate was 8.1% in May 2022, up from 7.4% in April. A year earlier, the rate was 2%. So to go from 2% up to 8.1% in 365 days is exponential rate of inflation. Going back to the calendar, we can see here that ECB member Knott said that several 50 basis point rate hikes are possible in the event that inflation worsens. Obviously, if it's going from 2% to 8.1% in a year, obviously based on the rising inflation due to energy prices and supply chain disruptions from China, then that's not going to change for another few months, it may be another year. So they're going to have to raise 50 basis point rate hike. Though, Knott said that he doesn't see 200 basis points before 2023. So maybe they get 4 50 basis point rate hikes within the next, several months, taking us up to the end of 2022. Then they'll be able to sort of see whether or not that affects the inflation rate if it does sort of stall out. But at the moment, it looks like everything's going to go higher. Going back to the active trader platform, obviously on the 15th of June, we had the FOMC raised by 75 basis points. That was a knee-jerk reaction to their inflation data. So it's just now a race to see who can raise rates fastest, see which of these currency pairs sort of benefits the most. Just in terms of price action, if we do get slightly higher highs and higher lows, then, the euro versus US dollar is currently looking like it's put in a swing low, and we should be targeting the 1.08. If we fall through Wednesday's high and then take out yesterday's low, then we are looking for, another move towards 1.02, maybe down to parity. That's been on the cards because we have been in this sort of long-term downtrend. We haven't seen any price action which has changed market structure for a long time. So, momentum and price action is likely to go lower more than it is to go higher. But yeah, if the market likes the idea of 50 basis point rate hikes from the ECB, then they might try and price that in. All right. In other news today, we've got quadruple witching, which means essentially that it's a date where on derivatives of stock index futures, stock index options, stock options and single stock futures all expire simultaneously. So if we look here around 2:30 my time, 9:30 Eastern time, we're going to get the E-mini, S&P, NASDAQ and Dow all expire. And that, when it happened on, if we just go to the S&P 500 on active trader platform, USA 500. We can see here that on the 20th of May, we had triple witching. So we had volatility come in. We took out the low from 13th of May, 12th of May. We took out those lows, and then we actually rallied quite hard. We did make a change in market structure. So we got back above the 17th, 18th swing high here, but we didn't make it through the 4,200. That acted as resistance, which meant we didn't get up to the 4,300 where all this liquidity is resting with all these sort of daily highs. So that still remains. We've got now to get from all the way down here around 3,700 all the way back above 4,200 to get that change in market structure. Obviously, if we get through Wednesday's low, which is currently potentially going to act as resistance, if we get through that, then possibly on a sort of more intraday chart, if we get back above 3,850, then that is a sort of intraday change in trend back above this swing high here, and then possibly we'll start to look for some sort of pattern where we go up, fill the gap, come back into the range from 14th of June, and then go higher, or potentially if we do get a blast higher on volatility, come up, fill the gap, come back down towards wherever the swing high is, maybe down towards 3,840, and then go higher. But at the moment, we need to see a lot of price action happen. If we're looking at momentum and RSI, like I said, back here on the 12th of May through to the 20th of May, we had positive divergence with the RSI. RSI still hasn't gone back below 30, so it is potential that the divergence between the 12th of May and yesterday's low on the RSI and price action could also be sort of showing a slowing momentum. But until we get back above 3,850, I am sort of still thinking that this is in a downtrend. And if we look to the left, we've got a target down here that from the fib extension, which takes us to 3,500. So maybe the volatility today is actually, stop some people into maybe a potential long and then sort of slam it lower. Or if they go lower first, maybe push into the 3,600 and then go higher towards the end of the day. Obviously, we'll have to wait and see. But until we get back above 3,841, this swing high from the 15th of June, I can't take a long anyway. So, on the actual daily trend following strategy that I'm doing, we'd have to get back above the 200 period moving average. So we'll have to see a lot of this correction be unwound with a big impulsive move to the upside before we start looking for longs on the indices. If I actually go to the Russell and the Nasdaq, so if I just scoot down here to the Russell, USA Russ, there are 69% of traders trying to go long. So again, we should potentially be looking to fade that, but the divergence is a lot clearer. So between the 12th of May on the RSI and price action to yesterday's low, there is more of a divergence in price action versus the RSI. So the Russell itself, which has led, which is a small caps index, has led the large cap index is lower. Maybe this Russell does get back above 1900 up towards the 2000, takes out this sort of relatively equal highs around 1950 first. But until we see that, again, can't do anything with it really. We're just sort of waiting to see if there is a potential for the market to get too bearish and then get trapped being short, and the sort of more sort of informed money takes it higher and then just takes their liquidity. Looking at the USA industrials, which is the Dow Jones Industrial Average, again, the price action is to the downside, but we're not seeing that in the positive divergence with the RSI. So this is one sort of bear sort of indicator that not all of the indices are following the same sort of price action momentum sort of structure that we've seen in other areas. Just going to the Nasdaq, USA Tech, we do have some sort of positive divergence, but at the moment, momentum is leading price action lower. We've got a very long way to go before we sort of reach value. So if we've got the sort of 24th of March around there on 2020, all the way up to the sort of 2021 highs, we've gone through the 50% here. That's acting as resistance at the moment, just below 12,000. We could come down to the 61.8% retracement, or even into this sort of big figure, 10,000. Deep retracement takes us all the way down towards 9,000, maybe down to 8,600. So still a lot of potential to the downside. if we were to get a close below 0.618 here, at 10,500 to 10,450, if we get a close below there, then that does actually open up this swing low from March 2020. So if we are going to a recession, if we are going to see higher inflation, I would be waiting to see if this sort of level here around the sort of balance area around July 2020 acts as resistance. If we get below it, to see if the 10,000 acts as resistance for then a deeper move below there. But at the moment, there's no trade for me to take at the moment. If we were to sort of see a push higher above the Bollinger Band, for the setup, then close back below the 9-period moving average is the sort of trigger to go lower. But at the moment, there's nothing to do. I'll just sort of point out that today there's going to be a lot of volatility. And then when they had volatility on the 20th of May, we actually saw a stop out, trap some short sellers before they actually pushed it higher. So maybe we get that again today. You just have to sort of be careful because it's Friday, going into the weekend. If you've made money this week, you obviously want to try and keep it so you can go back into next week happy. Just be aware of the volatility at the US futures open today. All right, good luck, and I'll speak to you again on Monday.